I'm just going to turn you guys loose. Steph, you go first. Why do you think Walmart is better positioned than the slightly more upscale Target right now?
Yeah, well, first, thanks for having me. And Ed, good to see you. So our pitch case on Walmart here is really about business mix. And when we talk about Walmart, we have to talk about it in two layers: Walmart retail, which is the core business in the US, and then, of course, Walmart Enterprise, which is the global business with all of these different dimensions that are coming into play. But on the Walmart retail side, which competes more directly with Target, the one thing that we favor is the business mix, and that's 65% necessity and grocery. That tends to be a winner in recessions, and we do see them taking incremental price, but still widening those price gaps. So in a position to take share in the big categories that we know matter most to consumers every week when they're going to the store.
So Steph likes the business mix here, which is more tilted, Ed, toward groceries and necessities than maybe Target's is, though Target is certainly in the grocery business, but their sort of sweet spot may be sort of upgrading your home and not necessities, but want to have. How do you respond to her and make the case for Target?
So I'd actually take something of the inverse. We think that one of the areas we're seeing some of the most competitive price pressures right now is grocery, right? All of the retailers are really focused on grocery inflation, and we think that, a player like Walmart, which lost share in 2020, is working very hard to maintain market share. And so we see them reinvesting in price and grocery, which is very difficult in an inflationary environment. The other piece I'd offer up is really one of the pieces you started with, and we think Target's more upscale consumer, at least thus far, fares better in this environment than Walmart's kind of middle of the middle consumer.
I think, Steph, Ed has a point there. We were talking last week about there are various sort of not just inflation numbers to consider, but impacts. And you would have to argue that inflation is probably higher and more damaging to the lower end customer than it is to the middle, upper middle, or upper end customer.
You're absolutely right. I mean, the lower end customer is a budget conscious, value seeking customer anyway. They actually lead the whole charge around value hacking. So we would agree with that if you're looking at positioning around a customer cohort, the lower end customer is going to be more distributed towards Walmart. Interestingly, if you look at Walmart's broad customer base, this is about 150 to 200 million customers a week that visit their stores. It does parallel the national household income distribution. So what I find interesting is we're really leaning in right now to both Walmart and Target and listening to what they're saying. They are seeing the most customers every week. So incremental change in that basket structure, sensitivity around pricing is going to show up for both of these retailers based on how those basket structures are being built. So I think both of these companies have an advantage, a unique advantage in this time. What we're seeing from Walmart that we like most is just this index to mix. And if we do see discretion continue to underperform staples in the basket from a logic perspective, we do expect Walmart to be a share taker here over the next 6 to 12 months.